My name is Chris Saginelli. I get to build, buy, and sell simple, profitable businesses every single day. And today we're going to be talking about operating with a HoldCo mentality. But before we get into that, or I explain what that is and go into the weeds in terms of the teach, train, equipped in terms of how, for those of you who are new here, every single week we run a poll. We reach out through our newsletter, which reaches about 50,000 or so profit-led business owners at this point. And we ask a question. And that's actually how we craft the content that we create. And then ultimately how we record these videos and decide what products to create in terms of the digital templates that we provide mostly for free over at our shop.bootstrappercapital.com. This past week, we asked if you could wave your magic wand, which is your preferred exit? And I was a little bit, surprised to see how close exit 4 and exit 5 are, but it makes sense, right? So exit 5 was the winner, and it was quite literally sell your business, right? Exit your business, which most folks think is the only exit. But the reality is there's 5 exits of ownership. We're going to go through all 5 of those as a reminder if you're new to this channel in a couple of slides here. But the 5th and final exit is selling your business. The 4th exit is when you can actually place an operator into your business or a leadership team, and you can exit out of the day-to-day operations of having to run the business. And that's when your business really turns from, truly into an asset, right? You can passively own it and still, put some profit in your pocket. Exit 3 is when you're starting to implement an operating system and you're running the business as an asset, as opposed to being caught in the weeds of the day-to-day of the business, right? So exit 3 is more for yourself. Exit 4 is, for others to be able to operate. And exit 5 is ultimately when you sell it to others and you want to maximize the best price, right? Today, we're going to be talking about how to operate with a HoldCo mentality and what a HoldCo mentality is and how operating with a HoldCo mentality actually solves this problem of either exit 3, 4, and 5. Because when you try to identify the root and you build to the root solution, you block the, you unblock the blockers, then you ultimately open up the opportunity to be able to achieve the outcomes you're looking for. And we believe that operating with a HoldCo mentality is the best way to achieve, ultimately exit 5, which is highest valuations, best terms on investment, larger exit multiples, and you're able to do so in a systematic way. So when we talk about a holding company or a HoldCo mentality, what are we actually talking about? And for those of you that may be new to the concept, that's perfectly okay. Everything starts somewhere. We've been running our HoldCo ourselves for the past decade and change. And it's really just a business that owns other businesses, right? So the most common example of a holding company that most folks know about is Berkshire Hathaway, right? Warren Buffett's company. And it's a business that just goes out and buys businesses, owning things like Geico Insurance, all the way through Dairy Queen, right? There's different types of holding companies, and there's different ways in which you can build them, but the general concept is the same. You're going to be able to set up an entity at the top, and then that entity is going to be able to pool capital, and then in a continuous structure, a continuous capital structure, deploy that capital towards the acquisition or potentially the build process, right? So you could either buy or build new businesses. And the holding company is not operating the businesses on a day-to-day basis. The individual subsidiaries, the companies at the bottom here, the operating entities are operational. They're operating the business. The holding company just essentially owns the equity, right? It owns the value. It's all being captured and flows up. I'm not going to go into necessarily the nitty gritties of a holding company today. We actually have other videos on holding companies and why it's a beneficial structure in general. Today's video is more about the actual thought process, the mentality around operating a holding company, and why when you change your perspective, you can change your approach, and why taking the perspective of an owner of a holding company can potentially allow you to approach your daily business, your business that you own and operate in a different manner, and potentially allow you to be able to achieve and traverse the exits a little bit simpler, right? Keep it simple. In terms of our journey, we're speaking from practical experience here, right? We've been operating our holding company Simple Holdings, right? So try to keep it simple. We always try to keep it simple. Simple Holdings for over a decade now. It's a little bit over a decade at this point. And it was the byproduct of having bootstrapped and built up profitable businesses and selling them. And the holding company structure was actually how we were, being able to keep our capital and then deploy our capital and operate in more of a sustainable, evergreen, forever business way, right? And this is our forever business. I'm going to be doing this forever at this point. And for us, the portfolio that we built around the primary brand is Bootstrapper Capital because it's our primary brand driver. It's our primary value proposition driver. It's the most affordable and flexible performance-based capital of choice for profit-led business owners. And we've built our portfolio of businesses, the companies that we own and operate, right, underneath the holding company. So each of our companies has an operator. Each business has a person that runs it on a day-to-day basis, and they all flow up to Simple Holdings at the end of the day. But they're all unique, and then they share, a meaningful focus that complements the whole. So this way, we're able to grow a portfolio of brands that help business owners access affordable and flexible solutions to be able to build, buy, and sell, your own business. And that's what we're focused on in terms of our portfolio thesis of what we're developing and designing around. So we know a thing or two about operating with the HoldCo mentality and the challenges, right? But before we get into the challenges, I want to talk about why it's important to potentially, take this perspective, right? Why is having a HoldCo mentality even relevant to you? If you're sitting there and maybe you're at exit 1 or 2, maybe you're exit 3, you have one business, it's like, why do I even need to think about, what it would look like to have to own and operate or own, and have responsibility for multiple companies, right? One thing aside, many folks who are bootstrapping today, what we've noticed, many folks are building multiple businesses, and they're multiple simple businesses that generate cash flow and profit. And in aggregate, the sum that gets lumped up at the top is enough to be able to support, life in a meaningful way. So a lot of folks, we're seeing an observation change in the market of, multipreneurship, right? Owning a lot of different simple businesses. Some folks are operating all of the businesses, and some folks are at the point where they're able to hire operators. But, we're seeing this as being more and more common. It's not just for, large, well-capitalized businesses anymore. So from just that perspective alone, I think that it's relevant to discuss. But from a practical and pragmatic perspective, why I believe that it's important, having now done it for so many years, is it truly does change your perspective, right? When you have to own businesses and you're responsible for the businesses, and it's your name on the contracts, it's your name on the liability, because within every asset is intrinsically a liability, right? When it's you're responsible, and within that responsibility, is a pressure, and that pressure needs to be alleviated in a very clear and systematic manner when you are not the one that's directly in control. So when you're sitting and you're holding the liability, but you can't necessarily take the action directly on a day-to-day basis because you passively own the business and you've hired other people to ultimately execute, right? When you're literally disconnected and you can't influence it with action, that's a very scary place to be at times. And if you don't have the right structure, strategies, and accountabilities in place, it could be extremely dangerous, right? You could be creating a significant amount of risk for yourself. So when you are in that position, in order to alleviate that risk, you have to approach things differently. And this challenge that comes with building a holding company or operating a holding company, it forces you to be able to build a better business. Because again, you're not directly influencing the results of the outcomes. You're achieving results through ultimately others. And when you're in this situation of ownership and you're not a direct stakeholder operating day to day, you only have the parameters of structure that you put in place. So the better you structuralize the business, the better that you get to operational excellence, the better that you really turn your business into more of a machine, right? Like think of it like a factory. Like you want to own the factory. You want to be able to have the raw materials go in, and you want the cars, for example, to come out, right? You want your business to work like that. And when you're not like able to run around and put out fires every day, or fix this or that because the factory is broken. The reality is with most of us, most business owners, our business is broken. And when you're in the situation of having to be a passive owner, it really, really forces you to simplify things. And in simplification, you're building a better business. And in building a better business, you're converting that business from what is likely a liability, because most businesses really are liabilities at the end of the day. It's only when you can convert them to something that can pay you passively that they become an asset, right? And that's the byproduct of actually getting to operational excellence so that you can be in a position of passive ownership. And that is having a HoldCo mentality, right? So it's that journey that is the why. That's why this is really relevant to everybody, because whether or not you're there, you should be aspiring to get there, right? And there's an approach to be able to do that. And everything starts somewhere, so you might as well start now, right? In regards to the challenges, so what do you need to overcome when you're operating with a HoldCo mentality? If you're not living in it today, it may be hard to put yourself into the perspective of it. But the reality is a lot of the things that go into wanting to operate with a HoldCo mentality are the same things that most business owners like yearn for, that we want so bad on a day-to-day basis. But sometimes, maybe we don't have the actual urgency to finally just achieve for ourselves and our businesses, right? So looking at a holding company, what you want your operating companies or subsidiaries to operate with, the challenges we need to overcome, is I want to have a really simple dashboard, right? Where I can see the metrics that matter, right? In previous videos, we talk about metrics that matter, and we have like really nifty templates and things of that nature to be able to identify what metrics matter in your business and then how to measure them and report on them. But like as an owner, I want that because I want the finger on the pulse. I want to be able to say red light, green light, right? Like I want to quickly be able to identify potential blockers or constraints in the business so that I can, delever risk as quickly as possible. And having a very simple dashboard that's like an owner dashboard, color coded visually, it's a very simple way of doing that. Now, that's easier said than done. In order for it to actually work, you need to create it, and then you need to put a system in place for the people in the businesses to adopt it so that your dashboard is actually providing you the right level of information. That then is what cascades to the other things that we need to accomplish, right? So we need to have a very clear North Star strategy for all of the people on the team to align around. Right? At the end of the day, when you're operating with a HoldCo mentality, even though you're not operating in the business day to day, you're not running things day to day, right? Even though that's not the case, you still own it, right? And it should be strategically well positioned, right? The reality is we all have the financial left, right? Numbers are a real thing. We need to know our numbers. We need to live within the financial parameters of our within the parameters of our metrics, right? And then we should have a why, right? We should be, running businesses or owning businesses with purpose. There should be a reason for why these businesses exist in the first place. And that should be clear. And there should be a vision, a purpose, and a mission. And everybody on the team should know it, right? So we should really have a clear North Star, right? It's having the financial left and the why on the right that gives us that parameter for us to operate in. So it's the vision, purpose, mission. And then it allows us to set clear objectives. When you're operating with a HoldCo mentality, you really want to make sure that the goals are aligned, right? So that you're focusing all of your resources, because you're really more of a capital allocator. You want to make sure that you're allocating and focusing your resources on the right things at the right time for the right reasons, right? Having a North Star strategy in place empowers your team, or empowers the operators of the businesses and the team of folks that are helping allow that business to run on a consistent daily basis, to make good, timely decisions, because they know, right? You want them to think about the right things, not everything. The goal is to make sure that everything doesn't exist, only the right things exist. Inclusive in that is the need to have profit-led financials, right? When you're in a situation where you're passively owning something, there's a goal for ownership, right? And that goal for ownership is profit in the pocket. And profit in the pocket, when we're looking at the profit waterfall, we have another video that we've done in the past that goes through the profit waterfall, where you can actually itemize and allocate profit so that you're running with profit-led financials. The last thing is the profit in your pocket in terms of the profit waterfall, even though we position allocations first, right? But you know what you want to achieve in terms of a return on investment, right? You're building an asset, you're owning an asset, and you want to make sure you're achieving a return on that asset. However, before you can put that profit in your pocket, there's a waterfall that takes place, right? First, it's like your 30-day operating account, right? Then you want your 3-month rainy day fund operating account funded. Then you want to fund your war chest, which is like for strategic growth initiatives. Then you want to fund your operator account so that you're paying your people, right, that are running the business, your operators, right? Maybe it's a profit share for the team to incentivize performance. And then you're going to cascade it into the disbursements, right? Profit in your pocket for ownership, passive ownership, right? So you want to make sure that you have your clean profit-led financials because they matter. And you want to be able to align the businesses within a budget, right? So that they retain the profitability so that the waterfall happens and that last bucket, the profit in your pocket, gets full, right? You're trying to fill the buckets. So you need to know how to run and operate with profit-led financials, right? Byproduct of running in a profit-led business is being hyper realistic, pragmatic, and conservative with the allocations of your budget, which means that you need to be investing into the right things, right? Which typically means the right roles to get for the right reasons, to get to the right outcomes, tied to the right types of targets, right? All facilitated with the right processes. So you want to have your roles and responsibilities and the processes to targets mapped out. You want it to be very, very crystal clear in terms of like how your factory is working, right? Think of it like, again, a factory with an assembly line, and everybody has a very specific thing, a job to be done, right? You want that to be crystal clear, and you want it to be as a capital efficient as possible. The way to make it capital efficient is to be able to put it in a position or visualize it where you can measure it in a way that matters. And the way that you measure that matters is tied to targets, which are tied to goals, which are tied to your profit-led financials, right? And everything cascades, right? And all of that's then achieving your North Star. And then the last thing is you want to make sure that there's an accountability calendar in place so that, as you're operating the business, there's feedback loops where people are able to, not just measure what matters, but also provide reports and feedback communications, retrospectives on whether or not we're achieving what matters, right? So that we can be proactive. Having a calendar of accountability, a cadence in place, allows for reports to be, created in a structured, consistent manner, which a byproduct of that means the owner's dashboard is being updated, right? So it's having all of these things happen that allows that final feedback loop where this first thing, your owner's dashboard, is actually working, right? So think of it like a system and think of it like a feedback loop, right? And you want the whole thing to just work in like a very nice ecosystem. That's a challenge. That's a pretty significant challenge. And a lot of folks are sitting there being like, well, when should you rise to the occasion of this challenge and start to adopt a HoldCo mentality and start to build kind of a business, an asset, right? Convert your business from a liability to an asset by adopting kind of like a system, a business system that supports that. So the question's like, can anyone adopt this? Or at what exit should you, right? And as a quick reminder here, so exit 1, we believe that there's 5 exits of ownership that you need to master. Every business owner needs to master all 5 exits, right? The first exit is everything starts somewhere. Typically, exit number 1, you're still in your day job. Maybe you're finding yourself in entrepreneurship as a byproduct of needing to replace your job, but you're leaving something and you're starting something new, right? Exit 1, The goal of exit one, when you follow the investpreneur's journey, which investpreneurship is a less risky approach to capitalism. It's what we promote over at Bootstrapper Capital. The number one thing, the first thing is, get a job, get somebody to pay you to get experience, take all that experience, some of that pay, build some of that aside. The thing on the side, exit number one, when it becomes your full-time, that's the first thing. You're exiting your job and you're making your business your job. Keyword there is job. You're now making your business your job. You have to do all the work, right? Exit number two is when you exit out of having to do all of the work and you start building a team, right? This is usually when, the fires start to happen inside of the business. Exit number three is when you start to try to solve for those fires or that pain of operating. And typically it's when you want to stop managing people or exit out of managing people and you want to start running a business, right? And this is when you're actually being able to operate, from a measure what matters perspective so that you can, achieve your profit-led financial and your goals of the business. Exit number four is when you want to exit out of, running the day-to-day, when you want to exit out of, operating the business. And that's when you start hiring an operator. That's when you place somebody else. That's the first real exit. That's when you actually convert your business from, a job or something you have to do actively to passive. That's also the first and primary goal of operating with a HoldCo mentality. So having a HoldCo mentality is pretty much to make sure everything you own is exit for ready. And by being exit for ready, a business is naturally ready for exit five, right? Exit five is when you stop owning the business, as you exit out of the business. In order for you to exit out of the business and get maximum value, you want to be you want the business to be a passive asset. You want it to be an asset and not a liability. You want there to be a system in place. You want it to be transferable, right? So that it's appealing to investors. The best way to validate that that's the case is to turn it into an exit for business and stop having to run the day-to-day, right? That kind of validates the fact that you are truly exit five ready and you're going to be able to get maximum value from the market, right? When it comes time to operate with a HoldCo mentality, in my opinion, is at exit number one, because you're not trying to leave a job to stay in a job. And you're definitely not trying to leave a job to then have like a ton of stress, make less money, be putting out fires all day, right? Which is what exit one and exit two, that's the life of exit one and exit two entrepreneurs. Exit one, exit two entrepreneurs, business owners is pretty bad, right? It's much better to just go get a job somewhere and get paid, meaningful wage for less responsibility and work, right? The goal is to get to exit three as quickly as possible. And when I did this poll, I put exit three, exit four, exit five. I should have probably put all five exits just to see, It's funny how closely though exit four and exit five are. I almost thought, because of a lot of our business owners are running their business, they're building businesses, etc. I thought exit three would maybe have a little bit more of a standing, to be honest, because it's like, you're passionate about what you're doing it for a reason. A lot of folks just want to have a better business to run, right? Put more profit in your pocket while you're building a better business. And, this is what you choose to do with your life. So I thought that maybe there would be more here, but I 100% understand why exit four and exit five, polled the way that it did. The reality is, you want to start doing this from day one. Exit one, you want to operate with a HoldCo mentality. And then systematically, you want to be able to get your business, you want to traverse to the next exit, and you want to get your business to a position where it can be exit four ready so that you could place an operator, right? Exit three is where it really starts to run as a business. In terms of how, though, the question becomes how, where rubber meets road in terms of, making this something that's real or tangible to you, and how you can start doing it from exit one, or at any exit realistically, is like, what's the simplest path forward to start, doing it? First thing is you got to change your perspective. So you have to be changing your perspective to think like, I don't want a job. I don't want a liability. I want an asset. And even if I really want to own or run this business for the next 5, 10, 15, 20 years or whatever, like this is the life I'm building and I want to own this business and I only want one, I genuinely believe that changing the perspective to I want to own this business, even if it's just one, I want to be an owner. And there's a difference, right? Having an owner's mentality or having a HoldCo mentality, right? It challenges you. You should think like, I want to be exit 4. Because even if you're in the business still, by getting to exit 4 and having other folks take on the blocking, the tackling, the day-to-day operating, it puts you in the capacity position to then just focus where you're going to be able to create the most value, right? To focus on the positions and points of maximum leverage inside of your business to be able to create as much value as possible. And that's what you get as a byproduct of doing this. So reality is everybody needs to start with the mentality. You got to change your perspective, right? Then you got to be able to figure out where the gaps are in your business. So when we work with business owners and we're trying to, ultimately at the end of the day with Bootstrapper Capital, we want to deploy capital, right? So we're trying to figure out the best businesses with the lowest risk to deploy our performance-based capital and partner so that we could be your capital partner of choice forever, right? Forever, or until you no longer need one. We want to be able to understand, the bones of the business. And the way that we start is we'll start with a valuation of a business. By starting with a valuation of a business, right? So when we start our journey working with folks, the goal is typically to build wedge equity, right? So we're working with folks to build wedge equity, which building wedge equity is to grow the incremental, value of the business. The thing in the middle, the yellow here, is the wedge. And it's the difference of value of your business over time by doing specific things that increase it. And the way that you can build wedge the simplest way is to just identify quickly the things that increase the value and then do that, execute it. So in order to make that simple, what we typically do is we start with a valuation. So we'll start with a business valuation and we'll understand what a business is worth today and why. We have a pretty comprehensive way of doing that. There's a lot of valuation tools out there that will spit out like, oh, your business is 3 times multiple of your revenue or whatever. Not really valuable to you, that information, because you want to understand why your business is worth that. You want to understand the gaps of your business. So by going through a really comprehensive valuation process, truly diligencing your business, you're going to be able to identify all the specific gaps inside your business. So you're going to get a valuation report. You're going to be able to work through, make sure your North Star framework is very clear. And then you'll be able to land with an equity transformation plan. The equity transformation plan is what ultimately identifies the gaps because it's saying this is what your business is worth and then why your business is worth that. By understanding the gaps, you can start to take action, right? One of the simplest possible ways to start identifying where the gaps are quickly, right? If you don't want to go through a full valuation of your business, is to just follow a simple business system checklist. What we've observed in our business, working with lots of businesses, thousands of businesses at this stage, is that based off of the exit, right? Based off of each of the different 5 exits, different things matter when it comes to building a operational business that's truly can achieve operational excellence and turns it from a liability into an asset, something that has less fires to put out, less problems in the day-to-day, a simpler business to run, right? So what we found is that simple, profitable businesses tend to have certain things in place based off of the exit. So what we've done is we've created this business system checklist, which is a really quick way broken down by exit to see whether or not you have specific things in place inside of your business. And as you start to go from exit 1 to exit 2 to exit 3 businesses to then an exit 4 business, you'll notice that there's more things that need to be in place. And this is just a simple way to focus, right? Because again, an exit 1 business is not the same as an exit 4 business. And even though we're saying like you should be doing this from the very beginning, it's like doing what, right? So get specific and accountable and focused because strategy equals focus. So we've created this business system checklist that quickly allows us to look through the business and just quickly say, does this exist or not? Right? Does it need work? It does not exist yet. It needs work. It's good to go, or it's not relevant. This is actually one of the first things that we go through when we're working with a business and we're actually completing a valuation process. The end result for us is to be able to hopefully work with businesses over time who want to implement our equity management system. And the equity management system is what we've designed. It's what we've developed. We license it out. We sometimes just give it out to businesses if we're investing in them. It's what we've learned delevers risk inside of a business that we either own. It's what we do for our own companies. So it's quite literally how we operate all of the companies inside our portfolio, simplest possible way. It's also how we delever risk for businesses that we invest in or partner with. And we've just learned that by organizing around profit, which is the first part of the planning process, you got to know your numbers, you got to have a North Star financial plan, which ties into your budget, and then you have to have your profit-led waterfall so you know your allocation targets. By having your numbers, you can standardize around your product. Standardizing our product, we typically start with a business system checklist, because that just tells us what exists versus what doesn't. Then you'll do profit engine mapping, which is how you're acquiring customers. We'll do process engine mapping, which is how you deliver value, like the value drivers of process to make sure your customers get the value and your business is running. And then we'll map it out so that visually everybody can see it. And by actually knowing what's happening inside of your business, you can then start to measure what matters, which is where you're getting alignment around your process. So you can start to simplify around process, right? So you want to visually know what needs to happen or what's supposed to happen so that you can then simplify what people are doing. And this becomes a roles, responsibilities. This becomes a who's doing what, when, why, and how, for what reasons, tied to targets that you can measure and then report on. We break these down by different processes or portions or business units, right? Focus, like customer acquisition, maybe it's sales and marketing, or finance, admin, back office, etc., client delivery, value delivery. So we'll break down the measure what matters appropriately. We want to run simple retrospectives. So like as we're simplifying the processes and we're running things and we're delivering value and we're testing things out, making simple bets, we want to run retrospectives to know whether or not we're on track and whether or not we're progressing towards our goals. And we keep libraries of the SOPs. So as we're building things out to be able to achieve these things, or we're adding new bets in to make the business better, right? As we're growing the business from exit 1 through exit 2 through exit 3, we're keeping an inventory of the SOPs and we're updating handbooks appropriately. So every business has an operating handbook, a sales handbook, right? An admin handbook, etc. And then we're making sure the calendar of cadence is there so that the reports are in place. We're actually reviewing, we're respectful of the information, and we're providing feedback loops with accountability so that we stay aligned with our North Star strategy. And every quarter, we're making sure that we're in place so that we can optimize around our people. And realistically, the goal here within an equity management system is to optimize around people, because people are a company's greatest asset. Realistically, great people make great companies. And if you can retain top talent, if you can retain great people for as long as possible, people have this really innate ability to slowly get better at what they do over time. So you get natural productivity lift. And when people are just like in a position where they're super happy, right? They really enjoy what they do because you've been able to optimize and simplify process and everything's very clear, right? And everything's sustainable. So they know they're going to be able to do it for a long time because you're profitable, right? When you're able to optimize around happiness, people tend to stick around. And when great people stick around, companies become great. They become assets, right? And you can own them, exit for business for a very, very long time. This is a simple way for us to implement something and execute something that gets us there. When we're working with the valuation, and typically when we start with the valuation, right, prior to implementing an equity management system, right, when we're actually understanding the value, we start with this simple business checklist. which if you want, you can get access to this template. You can get access to this business system checklist template, and you can do this process for yourself. Just pick, identify which exit you are, and then just go through the process of identifying an inventory, whether or not the item exists in your business today. You can get that in our shop over at shop.bootstrappercapital.com, and you can get it for free. You can use promo code Bootstrapper or whatever is the link inside of the YouTube, that's going to be able to bring you this template. We start here because, we integrate it into our business valuation. It's a very quick way to see drivers, but it's not where we end, right? So when we're working through a valuation with a company, we're looking at all the financial components. We're looking at the breakdown in terms of the brand equity, right? And the different components of brand equity. So brand equity is customer acquisition, which how you're acquiring customers, which you have the 4 pillars of customer acquisition. So we're looking at the key drivers of that, mapping that out, right? That also allows us to front run the profit engine mapping. So a lot of the things that we do with valuation, because it's so comprehensive, we're truly trying to understand what's going on in the business, where the gaps are, because you're trying to identify the risk, right? That's a big part of valuation, is you're trying to understand, what exists as well as what doesn't exist and where the risk lives, right? So you're trying to diligence the business. And that's actually how we started this, is we just took our diligence process and we started to productize it. So we're mapping out what's going on, in terms of your brand equity, how you're acquiring customers, what types of retention moats you have in place, right? We call them the 9 C's of retention: customer retention and lifetime value. So how you're retaining customers and increasing the overall lifetime value of the customers you have. And ultimately, the diversification of your customer portfolio, how much risk lives in your revenue streams, right? And that gives us a brand equity assessment. Then we get into operational equity and we start to process map. All of this stuff ties into this business system checklist. So this is truly a very simple place. If you don't want to go through a full valuation experience, just getting access to the template, going through it, taking a very quick inventory is a very pragmatic, efficient way of approaching and assessing whether or not, your business is kind of like HoldCo ready, or it at least gets you into a step where you can start operating with a HoldCo mentality. Hopefully you found this video valuable. If you did, definitely please like and subscribe. We're trying to build up this channel. Every single week, we're trying to put out more content that are tied to more products or templates that you can adopt. We want to give out 10,000 digital products for free within the next year. We want to get 1,000 profit-led business owners activated inside of our community so that we can start to build better together over at Bootstrapper Community. And the way we're doing that is to be able to create content and then provide free digital products and templates that you can implement to hopefully build wedge equity. And hopefully by building wedge equity and building relationships in the community, we can fund you over at Bootstrapper Capital, where we're trying to provide the most, affordable and flexible. We're quite literally pioneering performance-based capital. It's something that we invented, and we invented it specifically with profit-led or bootstrap businesses in mind. Reality is we're the largest demographic. We're the largest addressable market in terms of a TAM, right, of business owners. There's a little bit over 33 million business owners in the United States, and less than 1% ever receive any sort of venture, and something like only 16% or so ever have any sort of funding. So most of us are bootstrapped, most of us are profit-led, and unfortunately, the odds are against us, right? So we want to help folks beat the odds. 75% plus of businesses will fail within their first 5 years. We want to change that to 100% of profit-led businesses succeed within the first 5 years. And then hopefully all of those go on to continue to master all 5 exits of ownership. That's what we're on a mission for. We have a vision where that's achievable. And this is how we're doing it. We're creating content. We're creating templates. We're getting more folks into the community, more folks activated. We want to help implement more of these more equity management systems, because it's just a simple way to unlock value inside your business and actually build wedge equity. It makes you a more investable business, right? It decreases risk. When somebody has an equity management system, it means that they're operating with a structure, strategy, and accountability towards profitability. And when that's the case, it takes risk off the table, makes you more investable, and hopefully we become your capital partner of choice. All right, until next time, please like and subscribe. Trust the process, right? Trust the process. Commit to the journey. Keep it simple. We appreciate it.